Let's put the spotlight on the auto sector. 2024 came through. It was pretty divergent, especially between two-wheelers and four-wheelers. And we got numbers coming through for the month of December. Kumar, Rakesh is India analyst at BNP Paribas, is with us. Kumar, good to have you with us here. Good morning. Thanks for joining us. Just a quick word on the Hero numbers, Kumar. How would you read them? There's an 18% drop as compared to the previous month. Is this largely a result of, what you call channel stuffing? Too many sales to dealers and then sort of inventories being high, and how much of it is really sort of a demand issue at a more fundamental level?
Hi, good morning, Prashant, and thank you for having me on the show. And Happy New Year to all the viewers of your show and to your team as well. Over the last couple of months, we have done extensive work and have been highlighting this, that the financing has been one of the key drivers for two-wheeler demand over the last 1 year. If you see from the festival season of 2023 till this festival season, the industry has seen a very sharp recovery. Over the last 2 years, financing penetration for two-wheelers have increased by anywhere between 15 to 20 percentage point. So there has been a significant increase in financing, which is being rolled out to the two-wheeler customers. Now, this is not necessarily bad if these are new to credit customers. But what we have started seeing in the recent months is that the credit costs, especially of the captive financing arms of these two-wheeler companies, most of the two-wheeler companies in India which are listed have their own captive financing arms. Their credit cost has started shooting up. Those who report their numbers have risen to almost 5 to 6%. With that kind of credit cost, it's very difficult to see that they can continue to see the growth that we have seen over the last year or so. And hence, we just think that this is the unwinding of all that heavy push which came through the financing, very lucrative financing being extended to customers who may not have otherwise gotten financing, driving the growth. And now with that slowing down, we will fall back to what are the fundamentals of the industry. And fundamentals of the industry, at least for the two-wheeler consumption, we don't think has dramatically changed that justifies the kind of growth that we have seen. And more importantly, in the second half of this financial year, especially between September to April, the base is really high, driven by the factors I was highlighting. The industry had grown by about 25 percentage points. So to drive growth on top of that, when one of the strongest lever for growth is actually no longer available, becomes really difficult to see the growth to sustain.
Okay. Kumar, excellent, very cogent perspective. But how do you explain TVS then? They're doing very well, and one is not seeing them flagging off.
So the slowdown is across the board, as in even for TVS and for all the companies. If you look at the domestic sales of theirs as well, it was
motorcycles as bad, correct.
Yeah, so it is across, the slowdown is across. Of course, there is divergence in terms of some are still doing better than others and some are struggling more. Those trends usually are always in the market. It's a function of the product and the mix as well. But on the overall, if you look at the industry, almost everybody has slowed down in the recent months.
Okay, what about cars? I mean, the Maruti numbers were eye-popping. Small car, we had almost forgotten it existed. Everybody was in this SUV game. And it's done so well. Should we be happy? Is there some base here going on?
Yeah, I think we should be happy. But the argument which I was making earlier was largely concentrated into the NBFC, and Latha, you have in your shows highlighted this quite a lot of time, that how the struggle is there in the NBFC space and the MFI space as well. All of that is not so much in the segments of customers that cater to passenger vehicle. Usually, two-wheeler financing is led by NBFCs. Almost 60-70% of financing of two-wheelers are done by NBFCs, whereas it's exactly the opposite for the passenger vehicles, where banks actually lead most of the lending. And we haven't seen much of pain actually in that space. And hence the customer set is different, the financing institutions are different, and hence the fundamental of the sector hadn't dramatically changed because of the financing. It anyways already had a very high financing penetration. So what we are seeing is that part of it is the base effect, as you rightly mentioned, that especially the entry segment had fallen really low. So part of it is the base effect now starting to catch up, and that should help the industry. Part of it is just the general consumer confidence as well coming back. And if you look at the RBI's consumer confidence, it has risen further in the recent months. And that usually has a very high correlation with the passenger vehicle demand, not so much with the two-wheeler demand, but definitely with the passenger vehicle demand. So if I have to boil it down, all of it, what we are discussing here, the entry segment, which is two-wheeler consumption, may continue to reflect the demand slowdown, which you were talking about on the show earlier. Whereas the more discretionary consumption, such as passenger vehicles, are not so much impacted as the mass segment is.
Right.
Got that.
I just want to highlight just two more names, and I'll come back to you for your picks. Really, I mean, what you would like viewers to do. Just put up a DMart if we can. DMart, of course, growth was higher than expectations.
Yeah.
I think stock is up about 4-5%, 6%. So that could very well be the stock of the morning as we start. This is the pre-open still, although we're coming to the end of it. VMart is another one we should put up. I think, again, growth has been slightly better maybe. V2 retail is another one. VMart is up about 2% or so, but no volumes at all. I mean, so it's very small. V2 retail has got some volumes, but 5% higher. Look at PNB, Punjab National Bank, which is another one.
Deposit growth, 15%.
15%, almost 16% deposit growth. And look at something like a Bank of Maharashtra, which is, of course, I mean, a much smaller name. Here, deposit growth is about 13.5%, 14% or so. So that is Bank of Maharashtra there. As well. So, Rakesh, just to sort of finish that point on your picks, what do you have top of the list?
So as you could imagine, we would prefer passenger vehicle space over two-wheeler space. And our picks are in the passenger vehicle space. First is Maruti Suzuki, more from longer-term catalyst perspective. We have done a lot of analysis on their export market success, and we believe there's a lot of juice left in the export market. And that should continue to increase in the mix and continue to drive volume growth, while the domestic market continues to see a recovery in the coming year. The second is Mahindra and Mahindra, where there is already a very strong momentum on the SUV sales side. The recent model launches are yet to fully contribute to the full year numbers. So we should continue to see strong double-digit volume growth in Mahindra and Mahindra's SUV part. And now with the low base effect and a good monsoon season, the tractor demand also seems to be improving and growing at double digit. What currently the guidance is of high single digit could have an upside risk given how the numbers currently are panning out. And the fourth quarter base is really low for tractor. And hence we would continue to see momentum in Mahindra and Mahindra driven by strong volume growth.
Okay, pleasure speaking with you, Kumar, and we will invite you another day to understand auto ancillaries out of time today when the market's open for trading. Thank you very much. Have a great 2025 yourself.